And welcome back to Tuesday's Tax Tips with our good friend Andy Stadler. Today we're talking about taxable income. Pretty important because I think some folks out there don't know what they need to pay taxes on and the money they get that they may be exempt.
That's exactly right. There's a lot of folks calling me all the time saying, is this taxable or do I need to include this in income?
Let's start right at the top with Social Security income.
Yes.
Because we have a lot of folks out there who depend on that.
That's right. Social Security income, if your total income is only Social Security income, generally that's not taxable.
I see.
But if you're married and you and your spouse has a combined income and your total household income is over $32,000, including that Social Security, then it probably will be, and it generally is taxable. If you're single and you still have a part-time job or you have other income, interest income, other income coming in, and you have a total income, including that Social Security, over $25,000, then that will be taxable.
Let me ask you this. Let's say somebody out there is getting $15,000 a year in Social Security and adds 10 in a private sector. Is all 25 going to be taxed?
Well, we have to do the entire calculation on the 25, but then a percentage of the Social Security starts becoming taxable. So it won't be the entire $15,000, but a small part of it.
Very good.
Now, one thing that trips up a lot of folks, and especially if they're both getting Social Security benefits, if for some reason they want to do a married filing a separate return, automatically, it doesn't matter what your income level is, automatically Social Security is taxable. So when you're married and you have a Social Security disability income or just Social Security retirement income, you do need to file a married filing joint.
And that's why, you know, how to file and how you file comes into play.
Yes.
What are some of the examples of taxable income and non-taxable income?
Well, the non-taxable income would be child support, would be a non-taxable income. If you receive money from an injury, then that's non-taxable income. If you're receiving workman's comp, that's non-taxable. Typically, money from life insurance policies is non-taxable. There's a variety of things you want to be sure to get with your enrolled agent, your licensed accountant, to look through the exact list, see what you have to see if it is taxable.
What about inheriting something, or if somebody gives you a gift of cash?
A gift typically, a gift is not taxable. Normally inheritance is not taxable either because you've already paid the inheritance tax on it before it is given to you.
Comes to you. What are some taxable income, but usually not at the end of that list?
Well, typically, the life insurance usually is not, but it depends on how that policy was written up by the person that owned it. That could be. So you want to be sure to get with a licensed tax professional there. And then scholarships. If you're getting a scholarship or a grant at school and it exceeds your tuition, the amount that exceeds your tuition generally is taxable.
I see. Let's talk about some simple ways to file your taxes as we head toward that deadline.
Number one, e-file your tax return. This reduces down the costly mistakes. It speeds up your tax return. It just makes it a lot quicker. So number one, e-filing your tax return. Number two is be sure to check all the numbers on your tax return. Look at those Social Security numbers. If you've got them transposed wrong, you just got the 2 digits reversed, the IRS will simply take that dependent off your tax return. They'll do a mathematical correction for you, so be sure to look at that. Double check your figures. If you're just doing it by hand, using the old booklet, be sure to double check your figures, your own math, because that will create issues there as well.
And also, you want to make sure that you're exact, like
That's
Social
right.
Security numbers and other important information. How about some tax credits? We had about a minute left.
You know, there is a lot of tax credits out there. A lot of people may not be aware that they're eligible for. Number one, if you're claiming a young child under the age of 16, the child tax credit. You can get up to $1,000 per child you're claiming in addition to their normal exemption. Earned income credit. If you have children at home and your income is under $50,000, you can generally qualify for earned income credit. If you're single and your income is under $13,000, you'll qualify for earned income credit. College credit, that's a big one. Well, if you're in college or you have a child in college, you can get up to $2,500 of that tuition refunded back to you.
A lot of things to check out with your licensed tax preparer. And if you have any more questions for Andy, call his Tarot office at 478-2800, or the toll-free number is 800-447-2015. For more information, you can also log on to mywabashvalley.com, click on Valley Experts, and then Stadler Tax. Andy, thanks so much.
Thank you, Tom.
More news is headed your way next on Live at 5.